Chinese investment in the U.S. is revving up. One recent deal to hit headlines: Tencent Holdings' purchase of a 5% stake in U.S. electric car maker Tesla for $1.78 billion.
This seems like a massive deal. It is a massive deal. It's a lot of money being invested here, but it also shows China being at the front edge of technology, at the front edge of any kind of technological improvement.
But it's not just the tech sector that is attracting interest from Chinese investors. Just last week, conglomerate CEFC China Energy agreed to buy a stake in New York investment bank, the Cowen Group. Chinese cash targeting overseas companies is surging, particularly stateside.
There's a lot of interest in Chinese firms coming out to the US to invest into US companies because that's where really most of the growth is seen as in coming forwards. The big issue for them, of course, is going to be the current capital controls that we have in China that make it very difficult for them to actually change their money from renminbi into dollars to do any kind of acquisition.
The United States became the largest recipient of Chinese outbound FDI in 2016, with $45.6 billion worth of completed acquisitions. That's triple the amount in 2015. The expectation is for this upwards trend to continue in 2017.
Personally, my opinion is that the number is going to go up from the Chinese investors. Why? Because what we're seeing right now with Trump's policies is the stock market's up, right? And everybody kind of scratches their head and says, what's going on? But it has something to do with, like, you know, Trump has a certain business mind, and the Chinese investors know that, and they actually embrace it. They say, great, this is going to be an interesting time for us to invest and take advantage of what's going to happen on the business front based on this transaction.
The mix of industries targeted by Chinese investors expanded significantly in 2016. Before 2013, investments focused on the fossil fuel industry. But last year, more than 90% of Chinese FDI targeted U.S. services and advanced manufacturing sectors. That's according to the Rhodium Group. Deals in real estate and hospitality, information and communications technology, entertainment, and financial services led the way. The logistics, consumer products, and electronics sectors also saw a big increase from previous years, with analysts eyeing several other areas for this year.
I think renewable and battery tech, I think the Tesla investment from Tencent is not just related to cars. It also has something to do with solar and battery technology. And so that's definitely an area that is of a need. Consumer and service tech, what you're seeing now is China, getting very active in buying pieces of funds or portfolio companies. And what that means is they're trying to get actually the data and the trend sets directly from those companies to have an understanding of like where things are heading.
China's private sector is driving the growth of overseas investments. Privately owned companies accounted for 79% of total investment in 2016, about the same level as in 2015, according to data from the Rhodium Group. But the nature of Chinese FDI is changing.
One of the indicators I'm getting from the Chinese market is that they actually reinvest in capital. So they have gotten some gains, some profits, and now you're actually seeing a new wave of investment strategy. It's more strategic. It's more with joint venture in mind. It's not the old strategy of let's just deploy capital. Instead of just buying the company or licensing the technology, they're setting up joint ventures, meaning they're wanting to make sure that the initial company that drive that actually created that technology, the original team, is nourished and that they basically ensure that growth and that source of ideas and product while they actually developing the distribution platform in China. So I'm seeing more of a partnership approach and joint venture approach in China, which is it's a great change of winds.
U.S. companies also stand to benefit from this partnership approach.
What we've seen actually in a couple of automotive component companies and industrial companies is the Chinese companies want to come in. They've seen this company. They've said it's doing really well in the U.S. market. That's great. We think there's a great opportunity in China. Okay, we're not going to touch sort of the U.S. operations directly, but what we are going to do is expand them and then perhaps build on that link between the US and China. So, that might involve US some of the US management flying out to China to help develop it, hiring some US staff or relocating them, if willing, to China to help with the rollout there, and then continuing to build on the US operations where it's already doing very well.
A bright growth outlook in the U.S., an expanding market in China for products and services, and a number of deals currently in the pipeline suggest that capital will continue to flow stateside in 2017. But investors will be keeping their eyes on headwinds, including Beijing's tightened control over certain types of FDI transactions and how foreign investment reviews in the U.S. might change under the new administration. In New York, I'm Reuters reporter Christine Kiernan for CCTV.